That's stock market fundamentals, individual stocks and key sectors which still offer value with Ajay Bodke, Head of Investment Strategy with Prabhudas Lilladher. Ajay, good morning and thank you for joining us. Ajay, surely Indian markets of late have managed to climb the wall of worry. Nifty is now at a fresh 6-week high and the flows are also looking encouraging.
Good morning, Nikunj. I think there are 2 or 3 issues that the global markets are grappling with at the current juncture. You did allude to a few of them. I think the flare-up of geopolitical tensions in Ukraine and the face-off between the West and Russia, I think clearly would weigh on the global markets in the short term. The Chinese data has been a tad disappointing. And in addition to that, I think the GDP numbers, we were expecting around 4.9% GDP growth in the third quarter. And as we saw, I think the numbers have clearly disappointed at 4.7%. And I think what continues to be a major source of worry in the GDP numbers, if you dissect them, is the shrinking manufacturing sector, where we have seen the manufacturing sector shrinking by 1.9% and the mining sector shrinking by 1.6%. And even the 4.7% is essentially, if you look at disaggregate on basis, the financial services has grown at 12.5%, and that is essentially because of the concessional swap facility offered to NRIs and the deposits that came in that quarter. Agriculture has been pretty strong at 3.6% and services continues to grow at around 7.6%. The core sector numbers for January also have been a tad disappointing at 1.6%. India has been a clear outlier, has outperformed other emerging markets because of the stability on the external front, thanks to the RBI managing sort of to garner $34 billion in short-term deposits from overseas. I think all eyes clearly are on what kind of mandate is returned by the electorate after general elections, and the market clearly, I think, is playing on a hope that a decisive mandate is written by the electorate. March typically is a month where I think liquidity is a concern. Advanced tax numbers will be out on 15th of March. We'll have to watch on how liquidity plays out.
Fair point. Ajay, what about individual names? Firstly, let's talk about Maruti, because that has been one big drag. Do you sense that the news is now in the price and concerns about the Gujarat plant are already there in the price, or do you think there's further weakness in store for Maruti?
I think on your very show, when this news was announced, I had gone out on a limb and said that this is an issue which will have medium-term repercussions on the company. People will perceive it as a major corporate governance issue, and although the post, I think the weakness for a day or so that we saw, the price did go up by 100 rupees from 1590 to around some 1680. I think I always was of the view that this issue is not going to go away. I think this will remain as an overhang. A lot of institutional investors have very rightly taken up with the management that they should have a rethink of this issue. And I would sort of clearly weigh on the side of the institutional investors and urge the management, I think, to have a rethink about having a separate plant under Suzuki, and because Maruti does have a lot of cash on its books which it needs to deploy. And I think what better way than to deploy in a manufacturing operation. So I think I would stay away from Maruti at the current levels. I would wait for the issue to unfold and then sort of take a call. Maybe I think once some resolution it happens about this contentious issue between the management and the minority shareholders.
Friday came down, but Tata Motors went up on Wednesday and last Friday. Tata Motors is now marching towards the fresh 52-week high. Ajay, is this musical chair that money is moving out of Maruti and money is moving into Tata Motors, or Tata Motors genuinely is looking strong because what they've reported for the quarter gone by are extremely strong set of numbers? Operating profit margins for JLR now stand at 17.5%.
Yes, I think there's a part of that happening. I think people are moving into Tata Motors. The numbers of JLR have been very strong. Although I must point out, Nikunj, that the numbers of the domestic markets, the CV numbers that are announced, there's a very sharp 36% drop in the last monthly numbers. So I think on the domestic side continues to be a drag on Tata Motors, but then that's a very small pie of the overall revenues and profitability of the company. I think today in auto sector, I think if one has to look at non-two-wheelers, I think I would weigh in on Tata Motors side. I must also point out that the M&M tractor numbers have been very strong, and 18% growth they have shown in last month, although their UV numbers continue to be disappointing. On the auto side, I would still prefer a rural theme, a strong buoyancy in rural demand due to good monsoons, and play Hero Motors. Internally, I think our auto analyst is very positive on Hero Motors, and he's expecting a target price of around 2235 in Hero Motors over the medium term. So I think, I would have Hero Motors in auto space, and in auto ancillary space, Apollo Tyres and Motherson Sumi as part of core portfolio. We're expecting a price in the medium term of around 140 rupees in Apollo Tyres, and we are also expecting Motherson Sumi to do extremely well in the medium term due to the strong performance being posted by its European subsidiaries.
Ajay, sectorally, it was capital goods which really came to the rescue for the markets all of last week, and that was the top sectoral gainer, almost a 5.5% move. As a house, what are the stocks that you're bullish on in this sector?
I think capital goods, as you rightly said, was the biggest outperformer last month. It was primarily led by, I think, Voltas, which gave around roughly 26% in the last 1 month. Also, stocks like Cummins and Crompton did extremely well, along with Larsen. I think our view there is that whichever government ascends to the throne will have to look at infrastructure build-up, because that has been a bottleneck for the growth of the Indian economy. If you recollect, the panel had said $1 trillion of total spend on infrastructure, with 48% expected to come from the private sector, and this is up from 22% in 10th plan, 36% in 11th plan, to around 48% in from 12 to 17. I think if that has to eventuate, the government will have no option but to kickstart the growth in infrastructure sector, and Larsen & Toubro stands out as a colossus that straddles almost all the subsectors in infrastructure sector. Internally, I think we are very positive on Larsen. We are expecting along with Larsen, names like Crompton Greaves and Voltas to do extremely well in the medium term.
How real is the price action in some of these capital goods stocks? I've got your views on Voltas, but I want to understand what is the way forward, let's say, for an L&T, Adani Port, GMR, GVK, companies which are essentially asset owners.
I think one heartening news item that you must have seen is the fact that asset sales are happening. I think and JP, I think Associates is taking the lead after having sold their cement plant in Gujarat to the Aditya Birla Group. I think there are reports that they are looking to monetize some of their hydropower assets to pay debt. I think that is the way to go for some of these large asset owners that are burdened with extremely high leverage levels, and the banks, rightly so, are reluctant insofar as extending further loans are concerned. So I think some of the names that you mentioned, I think be it GMR, GVK or Lanco, I think over the next 15 to 18 months, they'll have to chart out a clear course of how they plan to reduce their large debt levels. And if they are able to strike, I think a few large deals, I think that could be the cue which the market is waiting for to look at a re-rating in the medium term for these stocks. Whereas in case of non-asset owners, I think this is where the first leg of move will happen, and the market is right in recognizing some of these names first. Subsequently, I think as and when the asset sales happen, the asset owners also will start coming into play.
Are you a big fan of companies which are resorting to fire sale just to fix their balance sheet? Because JP Hydro, yes, the attempt here is to fix the balance sheet to reduce the debt, but in that process they've also sold their family silver. They've sold 2 of their operating assets.
I think I was talking to a chairman of a fairly large bank, and he mentioned in the advice that he had rendered some of these asset owners, and to paraphrase his words, in bad times only good assets sell. So I think that is something that all these asset owners need to keep in mind, because otherwise if the economic downturn continues for some time to come, I think there is a clear danger insofar as the financial health of these companies and also some of the financial institutions that are lenders to these companies are concerned. So I think one could look at it from the perspective that you just outlined, but I would sort of rather weigh on the side of the companies needing sort of to get out of some of these assets. They could be good assets, but I think as I said, we got to sell in the market where there are buyers and reduce the debt levels. Because if you are expecting the economy to pick up in the medium term, you can always, with your competencies, build good assets.
Ajay, coming on Hindalco, it appreciated by about 8% last week. Tata Steel came down by 9%. Do you think the fortunes of Hindalco in the short term are more closely correlated to US, not China? Because bulk of the aluminum demand is a function of US housing prices and US airline industry.
I think I'll have to refrain from commenting on Hindalco. We don't cover the stocks, Nikunj. But talking about the metals, I think that is one sector which has taken the mauling in last month. The metal index has sort of been the worst performing index among the other sectors. So there I think our analyst is of the view that NMDC and Hindustan Zinc are the two stocks that he favors. He's expecting in the medium term a price target of around 163 for NMDC and a similar price target for Hindustan Zinc. And the government has reiterated that they are looking to complete the divestment process for Hindustan Zinc in the next financial year. They couldn't complete it in this financial year, but the process is on. So I think if in the metal sector, I think these are the two stocks that we would recommend investors as part of the core portfolio.